Alright, let's start with a scenario. Imagine this: you've diligently invested in M1 Finance. You've crafted a beautiful pie, automated your contributions, and watched your portfolio grow. But then, life throws you a curveball. Unexpected expenses pop up, a sudden opportunity arises, or maybe you simply want to rebalance your finances. The question burning in your mind is, can you actually access your money in M1 Finance when you need it? Can you withdraw your hard-earned cash? That's the question we're tackling today. Because let's be honest, the ability to access your funds is a fundamental aspect of any investment platform. It's not just about growing your money, it's about having the flexibility to use it when necessary. And in the world of online brokerages, where things can sometimes feel a bit abstract, knowing the ins and outs of withdrawals is crucial. Now, before we dive into the specifics of M1 Finance, let's take a moment to understand why this question is so important. We live in a world of constant change. Financial needs fluctuate, and the ability to adapt is paramount. Whether it's a medical emergency, a down payment on a house, or simply wanting to take advantage of a market opportunity, you need to know your money is accessible. Many people are drawn to M1 Finance for its unique pie investing approach, its automation features, and its commission-free trading. These features make it an attractive platform for long-term investors. But what about the short term? What about when you need to tap into your investments? The reality is, the ability to withdraw money is a core function of any brokerage account. It's not a fringe benefit, it's a necessity. And while M1 Finance offers a plethora of innovative features, its withdrawal process is often a point of curiosity and sometimes confusion. So, let's cut to the chase. Yes, you can withdraw money from M1 Finance. But like most things in the financial world, it's not quite as simple as clicking a button and instantly seeing the funds in your bank account. There are nuances, processes, and timelines to understand. First and foremost, it's important to differentiate between the different types of accounts you might have with M1 Finance. You could have a taxable brokerage account, an IRA, or even a trust account. Each of these account types has its own set of rules and regulations regarding withdrawals. For a standard taxable brokerage account, the process is relatively straightforward. You can initiate a withdrawal through the M1 Finance platform. However, it's crucial to understand that withdrawals involve selling your investments. This means that if you're invested in stocks, bonds, or ETFs, M1 Finance will need to sell those assets to generate the cash for your withdrawal. This brings us to the next important point: market fluctuations. The value of your investments can change between the time you initiate a withdrawal and the time the sale is executed. If the market goes down, you will receive less money than you initially anticipated. Conversely, if the market goes up, you will receive more. Now, let's talk about the timeline. M1 Finance, like most brokerages, doesn't offer instant withdrawals. There's a settlement period, which is typically 2 business days. This means that after your investments are sold, it takes 2 business days for the cash to settle in your account. Once the funds have settled, you can initiate a transfer to your linked bank account. The transfer itself also takes time. Typically, it takes 1 to 3 business days for the funds to arrive in your bank account. So, in total, you're looking at a process that can take anywhere from 3 to 5 business days, or sometimes longer, depending on weekends and holidays. Another factor to consider is the minimum withdrawal amount. While M1 Finance doesn't typically impose a strict minimum withdrawal amount for standard brokerage accounts, there might be limitations based on the specific assets you're selling. For example, if you're selling a fractional share of a stock, the sale might need to reach a certain threshold before it can be executed. Now, let's address the elephant in the room: taxes. When you withdraw money from a taxable brokerage account, you might trigger a taxable event. If you're selling investments that have increased in value, you'll likely incur capital gains taxes. The amount of tax you owe will depend on your tax bracket and how long you held the investment. It's crucial to understand the tax implications of withdrawals before you initiate them. Consulting with a tax professional can help you navigate the complexities of capital gains taxes and ensure you're making informed decisions. Now, what about withdrawals from retirement accounts like IRAs? The rules are significantly different. For traditional IRAs, withdrawals before age 59 and a half are generally subject to a 10% early withdrawal penalty, in addition to regular income taxes. There are exceptions to this rule, such as for qualified medical expenses or first-time home purchases, but it's essential to understand the specific requirements. For Roth IRAs, withdrawals of contributions are generally tax-free and penalty-free at any time. However, withdrawals of earnings before age 59 and a half are subject to the same 10% penalty and income taxes as traditional IRAs, unless you meet certain exceptions. It's also important to note that M1 Finance offers M1 Borrow, a feature that allows you to borrow against your portfolio. While this is not technically a withdrawal, it can provide access to cash without selling your investments. However, it's crucial to understand the risks and costs associated with borrowing against your portfolio, including interest rates and potential margin calls. Another critical consideration is the security of your withdrawals. M1 Finance employs various security measures to protect your account and your funds. However, it's essential to be vigilant and protect your login credentials and personal information. Be wary of phishing scams and other fraudulent activities. To initiate a withdrawal, you'll typically need to log into your M1 Finance account, navigate to the transfer or withdrawal section, and follow the prompts. You'll need to specify the amount you want to withdraw and the bank account you want to transfer the funds to. It's also important to ensure that your linked bank account information is accurate and up to date. Any discrepancies can lead to delays or even the cancellation of your withdrawal. Before initiating a withdrawal, it's a good idea to review your portfolio and assess the potential impact of selling your investments. Consider the timing of your withdrawal and the potential tax implications. And remember, investing is a long-term game. While withdrawals are sometimes necessary, it's important to avoid making impulsive decisions based on short-term market fluctuations. Finally, remember that customer support is your friend. If you have any questions or concerns about the withdrawal process, don't hesitate to reach out to M1 Finance's customer support team. They can provide guidance and assistance to ensure a smooth withdrawal experience. In essence, while M1 Finance allows you to withdraw your money, it's a process that requires careful consideration and planning. Understanding the timelines, tax implications, and potential market fluctuations is essential. By being informed and prepared, you can navigate the withdrawal process with confidence. With that said, thanks for watching, and until next time.